Well, in the dynamic world of stock trading, the landscape is continuously evolving, demanding innovative solutions that cater to both novice as well as seasoned investors. Well, my name is Shreya Jain, and today we have with us a very special guest, Ujjwal Jain, who is the CEO Share.Market.
Now, Share.Market is a groundbreaking platform that is revolutionizing discount broking by integrating comprehensive research as well as intelligence. Now, unlike traditional discount brokers that primarily focus on low cost trading, Share.Market elevates the experience by providing users with in depth factor analysis, expert insights, and data driven strategies. Well, we discuss more about this in our conversation today. Join us as we explore how Share.Market is setting a new standard in the discount broking industry, blending affordability with cutting edge research to create a truly intelligent trading environment. Welcome to the show, Ujjwal.
Thanks, Shadish. Thanks for having me on the show. And thanks everyone who's tuned in to view this stream.
Thank you so much for your time. And before we go ahead and talk more about Share.Market, let's also understand, a little about the journey. Going back to 2016 when you started a bootstrap startup, what was the thought process, and how much of that has been carried forward to make Share.Market?
Yeah, 2016 was interesting. I think before starting up, I was building things for global markets, and I was fortunate to be in Bombay to build specific thing working for a global hedge fund. And in 2016, when I actually quit my job, it was a pretty interesting time. Like on one side, I was seeing that financialization of savings was a mainstream thing, and savings going into equities as an integral asset class for wealth creation was a real trend, and India's long-term equity story was well understood. And the largest beneficiary of this trend was mutual funds, because mutual funds for the longest time went through that foundational framework to actually expand or become a population scale acceptance as a product. And if you look at 2014 to 19, SIPs grew by almost 47% compounded annual growth at a CAGR of 47%. So from 1,200 crores a month of SIPs in 19, we were at 8,000 crores. And post 19, and then COVID and all, the 100x story of mutual funds continued to compound, and at a rate of almost 20%. And today we are sitting at an SIP of 21,000 odd crores a month. But the broking industry during 16 was in the early stages of going through that growth cycle. While equity continued to be the mainstream for financialization of savings, mutual fund was the preferred route. Broking was picking up thanks to the regulators' approach to enable online opening of accounts, completely digital journeys, and the start of a new era through discount broking. So what discount broking industry took as their first goal was to make sure if somebody wants to open an account online, we become the preferred platform first for providing a seamless onboarding experience, and also providing a very discounted pricing in terms of brokerage, so that people understand and accept direct investing. So discount broking took that as a mission to expand the markets. So if you look at 2014 to 2024, the entire last 10 years has been about expanding the market, especially making people open their demat accounts. So in 2016, I took a very bold view. Now I can actually talk about it in 24 when things are working out well. Is that we took an approach that if everybody opens a demat account and it takes a population scale view and markets continue to expand, how will you ensure that these people invest smartly, intelligently? So we started in 2016, and you said the word bootstrapped. There's a reason to be bootstrapped, because building for a 10-year view requires your own commitment, patience, perseverance, and we took all of that into our mindset to build something with a long-term view. And that is how we started building an intelligence layer or an intelligence platform that sits on top of broking platform. So what it means is, if tomorrow there's so many broking accounts getting opened up, how do you make these investors get access to intelligent products, experiences, so that they can invest smartly? And that was our mission statement. And when we started Share.Market in 2023 September, We started in 2023 September, and this is after the acquisition of our intelligence platform, both WealthBasket and OpenQ. We continued that journey, and we actually took again a very bold 10-year mission statement now in 24, where we are saying that as markets continue to expand, and we will continue to contribute by bringing more people into broking industry through Share.Market. How do we actually capitalize on the next wave, which is how do we sustain these accounts to invest smartly, trade intelligently? And that is the mission of our business Share.Market, where we are elevating discount broking by bringing intelligence at its scale. And that is our focus, and that we continue to take along with the journey that started in 2016.
Absolutely. In fact, from 2016, the whole market cycle has, come and gone. And you could say we've seen COVID as well in between, where the things have taken a turn on the downside. But then we saw a massive, influx of money or liquidity coming in by the way of retail investors, by mutual funds from retail investors into the market. So that's a big thumbs up, and we are looking forward for golden period. And as you rightly pointed out, in the conversation, that right now SIPs are more than 21,000 crores a month, and that's a big number by any means. If I recall my journey, I mean, this is something which I haven't also expected in the past, but yes, that is something which is a reality now. So yeah, wishing you all the very best on the same. Now moving on to my next question, well, in this highly competitive space of online finance platforms, and you also pointed out in the conversation, where there are legacy players and new tech-driven platforms, how does sort of Share.Market differentiate itself?
Yeah, so there are two aspects to this. So one aspect is generally as a broking industry is evolving. Now, when you say incumbents and then you say new age tech brokers, there's this fundamental thing which is actually common and applies to everybody who is doing broking today, is that it is actually becoming a technology, tech first, or a consumer internet business. It is becoming an engineering business where you have to invest a lot in building technologies and reliable, fault tolerant platforms to actually serve consumers. And it is actually an engineering problem for that matter. Whether you are a full service or a discount broker does not matter. So that's one thing. The other thing is largely the era of the broking industry can be called pre-discount broking era and post-discount broking era. So incumbents largely fit in that pre-discount broking era, where their focus was to actually serve a finite set of customers and try to provide value through a lot of high-touch relationship, sub-broker, distribution, RMs, etc. While discount broking was invest a lot in technology to expand the markets, make it open to all on a DIY route and at a very discounted pricing. Now, while our approach is very clear that while markets will continue to expand, we are talking about around 16 odd crore demand accounts right now, and it is growing at a very healthy rate of 20-30%, and that will continue to grow because India is still in very early stages of penetration of demand accounts at a population scale. So that will continue to expand, and it will be largely driven by discount broking industry. And this continuously requires a lot of investment in technology, experiences, distribution technology, etc. And we as a group, PhonePe, as a group, we are a consumer internet company, and we really look how to expand markets, bring reach to large millions of Indian customers, and our payment journey has actually taught us a lot to actually build for scale. So we will continue to take that experience along to expand the markets along with other discount brokers. So that stays. But if I look at the 10-year view of discount broking industry, which is how do you invest in the next most important thing that a customer needs is that intelligence, which again is a very deep technology play. There we started the journey back in 2016 itself. Now, post-acquisition of WealthBasket and OpenQ along with PhonePe distribution strength, we have combined all of that experience together in Share.Market. So while we will work along with other discount brokers to expand the market, but our journey to actually provide intelligence by investing a lot on technology and research at scale will help us to actually build for the next important focus area in broking industry, where while 16 crore demand accounts are there, but if you look at the number of people who stays active during a year, still is in the ranges of 4 odd crores, which is almost 25%, right? That is because many people go dormant or make mistakes on direct broking platforms. While they continue to have increasing their SIP amounts on mutual fund platforms, because mutual fund products, because there's a smart fund manager who's helping them to build a sustainable portfolio and a growing portfolio. But on broking, their choices actually make them go through losses. So if we provide the intelligent in a right way on those platforms and experiences, I think we can able to help these customers invest in markets with a lot of confidence. And that is our focus area in taking discount broking to the next level by providing value at scale. And that, I think, is a great place to be, to actually build with a long-term view.
Absolutely, and in fact, we'll touch upon the intelligence part, later in the conversation. But before that, let me also get your viewpoint on what are the unique value proposition does Share.Market offer its users. If you can also just highlight a little bit upon that.
Yeah. So actually, because I've been talking a lot about intelligence on discount broking, I mean, what actually it means, if I look at investing in stocks, right now, most of the people who invest in stocks on stockbroking platforms, they really look at information sources, research reports, and market news and everything else, and make a call to invest in specific sector, theme, particular stock, or basically they have a view on a set of companies, etc., even including promoters for that matter. So all of these, the underlying tenet lies on what are the factors that define stock prices, right? And globally, there's trillions of dollars that gets tracked to something called as factor research. It is powered through quantitative models, and this factor research in India, even they loosely, it's also called smart beta. There are a bunch of factors that actually helps define a stock prices, which is quality, value, size, yield, momentum, and sentiments. Now, quality is generally how the fundamentals of the stocks are, so that's a quality factor. Value is that are you able to get it at a good price. Momentum is the velocity at which the price can move, and then again your sentiments, which drives how the sentiment of the stock is, both on the internet as well as generally through analyst coverage. And all of these factors actually we have very smartly blended into our product experiences, and that is what we call an intelligent layer. And what we have done is we have taken all this quantitative research that is built on our platform, and that we run through a large computation engines to actually track every stock in Indian universe on these factors, and we update those research on a daily basis, and those research gets replicated on our experiences on platform, where if you're investing in a direct stock, you will get to see a view on these 7 factors on the stock page. So if you're on our watch list, if you're trying to invest in a particular set of stocks through a portfolio curation that we have basket, then we have this research available to screen specific stocks and sectors, that is called collections. And our idea is very simple. When you come on our platform, whether through our markets page, whether through our discover section, and trying to invest in specific investment product, these research experiences are a part of your journey, and that helps you make intelligent. And that is our focus area. And there we are investing a lot on building the platforms and the technology, consuming data from across sources to power our research cloud. And that, I think, is the next wave also of discount broking, where while continue to provide a discount broking pricing, but how do you provide the value or research or intelligence at the same price at scale, and that can only be solved by technology. Previously people used to think how you can have a discounted broking model and build a sustainable business. Today we are saying, while we continue to have a discount broking model, we can also provide intelligence, and that, I think, can only be possible through actually investing a lot in the technology and providing those in the form of right consumer experiences also, so that people actually accept it. So that, I think, is a great where we are today on our
absolutely. In fact, it is like marrying best of the worlds into one product, and it will also help in actually retaining the user to the single platform, wherein they'll be able to not just get the price or the stock price movement, but also be able to make that decision intelligently using various models or various factors that you've just highlighted. So yes, it's a win-win for the investor. At the same time, now coming to we've talked a lot about the intelligence layer. So yeah, if we can also elaborate on the intelligence layer within the Share.Market, and how does it provide insight to the users?
Yeah, so as I said, so we actually took a very clear approach that if somebody wants to invest directly, or if somebody wants to consume research, our intelligence layer should serve both very subtly, in the way that they continue to achieve their objectives. Because in broking platform, it is very important that you work around the investor or the trader's need, and not try to
True.
be on a side where they are not able to achieve their mandates in terms of how they want to invest, right? So our intelligence layer actually is we have right now our platform. If you go, you will see there are two areas where we put that intelligence layer. One is on the markets. So if you want to have a broader top down view of markets, starting with indices and all, you will see we are trying to put a lot of information architecture in terms of funneling that information, so that you are able to consume a vast amount of information very intelligently in a very short span of time. So that's our
Okay.
market sector. So there, if you see the data points and and trackers of broader markets we have put in, and the flow of information, we are making sure that you actually save a lot on your time and intelligently make business in trading or investing while looking at market movements. So that's on the market side of things. There we are continuing to add value. We are taking a lot of feedbacks from our customers and continue to evolve and make our market section really intelligent. And then comes on the real call to action, which is how you want to invest in a set of stocks. So there, as I told you before, where for the DIY we have brought factors or the quant research directly into stock pages, so that you can get an assessment beyond technicals and fundamentals, which is so mainstream in India. We have got this quant view for the first time on broking platform at a very institutional scale. It took a lot of time, investment to actually build, to actually cover Indian stock universe on quantitative research. That is now available to investors at large on our stock pages. The moment you go beyond and you want to screen through those using those factors, create a set of stocks or a basket or a specific sector theme, you can actually create your own. You can see a bunch of collections. So that's where we gave that fluidity to actually understand a set of stocks around these factors and build your own portfolio. And the third is where we already using our own in-house research. We curate a set of stocks in the form of baskets, which we call as WealthBaskets. And that is available for you to invest directly for. And these WealthBaskets across asset allocation ETFs to momentum portfolios to quality portfolios to sentiment portfolios, and powered by our in-house research. You can invest in these WealthBaskets, and whenever there's a review on the research on the underlying stocks, you get an update. Right. You just go ahead and change and execute basis your discretion. So we have brought this intelligence layer in a very easy to understand, and in the journey of the consumer, they are able to get these intelligence inputs to make their investing and trading journey better.
No, in fact, it's a very interesting point that you mentioned, Ujjwal, and it looks very interesting product at the same time. WealthBaskets, and it sort of gives an idea to the investor how to hedge the particular portfolio, how to hedge their portfolio in case they want to go beyond just vanilla stock picking. They can also combine other relevant like ETFs and moment investing into their research or into their portfolio and add on to it. If you can just elaborate more on the WealthBasket, because it looks very interesting, and I'm sure our investors who want to invest in this product would be looking forward to that.
Yeah. So the toughest journey for most of us when we invest through broking platforms is that, like, entering a stock is very easy in most cases. Like, exactly. When you're able to capture a theme or a strategy or even a standard large cap stocks, right? But the problem happens when to exit, and sizing also. Like we continue to expand our savings, right? But how do you allocate those savings into the right stock portfolios? That's the challenging part. And rich people actually do have access to private wealth, PMS, AIFs, categories, while retail investors largely have mutual funds, which is a great investment product. And at the same time, they open their broking account to actually invest in direct stocks and ETFs. So in that space, WealthBasket actually brings in very paradigm shift in how you look at stock research. So for the longest time, you've been part of markets for so long, you know that there have
Right.
been so many coverage on individual stock research reports that come out from the big names, right?
Mm,
But
mm,
a lot of research arms actually look at a set of stocks when they create the research
mm,
reports, right? And they want to
right.
provide that research in the form of a set of stocks following specific
Mm,
strategy, right? Now the problem is that if you open that set of stock as a research to the consumer on a broking platform, they still look like as a set of stocks in a list, right? And you can make your choices
exactly.
which
Mm,
to invest and what to invest. So
mm,
we have actually concentrated that into an experience called WealthBasket. You can
mm,
actually look at the set of stock research in a unified view and together and understand that whether that momentum in that momentum research these set of stocks make sense to me. You can go ahead and
mm,
invest in it. And the best part is not just the entering that WealthBaskets. Also, whenever there's a change in the research or a review,
right.
research goes through rebalancing on a systematic
Okay.
basis, you get an update basis your investment amount, your quantities,
Mm,
in terms of the change in your portfolio, and very
okay.
seamlessly you can actually accept or make edits to that change and execute in your broking account
Mm,
directly. And it makes so simple to actually consume now set of stock research or a set
mm,
of
mm,
well basket. And the best part is that now on broking platform you are empowered enough to actually build a portfolio with a long term wealth creation view, or even
mm,
when you're moving money across sectors. Like if you know
mm,
that there's a lot of momentum expected in pharma stocks for that matter. Now instead of
right.
finding those random pharma stocks on your own, potentially there's a pharma well basket which actually
Yeah,
captures that thing very intelligently. You just go ahead and invest in that set of stock tracking that pharma research, and
right.
whenever there's a change you can update. And this brings a lot of systematic investing lens in direct stocks and
Right.
ETFs. and
Mm,
and also ETFs, by that way. Like instead of like investing in a Nifty 50 ETF directly, you actually take an asset allocation approach between Nifty 50, Next 50, or possibly a US ETF or a gold ETF,
mm, mm,
doing an asset allocation. So they are wealth baskets on ETFs which actually provides intelligence asset allocations, and
okay.
on a risk adjusted basis these are
Mm,
actually better research portfolios. So
mm.
this is actually a new way to actually get into direct stocks and ETFs, and the best place for this product is on broking platforms, and that is what WealthBasket is all about.
No, absolutely, and it looks very interesting. Now, before I sort of move forward, I'm sure if someone wants to invest, they would have this question as to who would review this wealth basket. Is it Share.Market team who will review the basket?
Yeah, so we have a research arm where we actually we power this entire well basket through our own in-house research, and they review that. So
Mm,
there's a full platform which actually powers research platform where you get your
okay.
basis your investment date and the review of the research. You will get an
Mm.
update through your email, PNs, and on the app, and you can actually update your portfolio.
Ah, okay. Very nice. So keeping everyone informed at the same time, if in case there's a review and there's a change in the stocks, and I'm assume that when experts say that they're not so for a particular sector, you talk about pharma. Let's say, so which are the stocks in the pharma sector which are looking which are trading below the intrinsic value or which are trading at an attractive valuation. So you've already selected all those stocks at that point in time. So the user or the investor does not have to really go ahead and single-handedly select the stocks, but you've done that part, if I'm not wrong.
Yes, so for example, if it's a momentum pharma portfolio, so it already
Hmm.
captures the momentum in pharma sector, right? So the stocks that are there in that pharma well basket are best on the momentum score or the momentum
Ah,
factor.
right.
So if the pharma sector price moves at an X percentage, definitely the
Hmm.
high momentum factor, like stocks which has high momentum scores, will actually tend to outperform the overall pharma. So you are better placed if you take a momentum exposure to pharma stocks. And similarly, if you
Absolutely.
want to build a long term portfolio, there are quality factors, value factors with a momentum lens also.
Right. Absolutely. Wonderful product there, Ujjwal. Now, let me also get some idea, since its launch, Share.Market, how many users has actually joined the product, and can you share any relevant growth matrices or such as active user base or trading volumes on the platform?
Yeah, so on the demat accounts, actually we have crossed 500,000 demat accounts. So we've already
Oh,
crossed
okay, very nice.
demat accounts in since our launch. And on the mutual fund, by the way, we have crossed 1.7 million SIPs a month executions.
Oh,
So
right.
that's the kind of growth
That's
we are
very
going
nice.
to, and it's pretty exciting. Yeah.
No, no, absolutely. And we wish you all the very best on the future endeavors as well, and keep doing the good work. Well, in the meantime, I've also wanted to get some perspective on, what does intelligence mean beyond equities?
Yeah, actually we just went live a month back on futures and options also, and
Uh-huh.
intelligence has to go beyond equities also. So and that's the whole like the plan, the whole focus actually, to make sure intelligence layer expands all asset classes that we bring on our this broking platform Share.Market. And
Okay.
with live of futures options, we have already started with option chain analysis for all index and instruments across all strike prices. We are able to actually provide more detailed option analysis actually through Greeks. And within those Greeks, we are working to actually invest a lot on volatility as a factor, because
Oh, okay.
fix volatility index tracking on option pricing actually is a great place to be from a trading point of view, and there's a
Mm,
big
mm.
market to actually play on volatility. So that's where our focus is on the futures and option side, where we will continue to expand our intelligence, vision, data research, and make that available to traders. Because as we
Mm.
see that because as a lot of people actually go into derivatives trading, we want to make sure that they have all the data and insights to actually make an informed choice when they are exposing themselves to derivatives
Mm.
products. So intelligence on those areas actually is continuing to be our focus. And on
Okay.
options, option chain is what we are actually putting a lot of investments to provide the light
Mm.
analysis on that front.
All right. So FNO will be the next big target area for Share.Market.
Yeah, FNO is an important market from a trading customer's point of view. They actually really, both option sellers, option buyers, and across the
Mm.
ecosystem, and the people who actually do hedge beta through markets.
Mm.
They also expose themselves through these derivatives. So we will continue to provide them the right tools and execution experiences.
Right. Now, let me also understand, Ujjwal, that what are the biggest challenges that you envisage in the current market landscape?
Actually, it's pretty interesting. Like, while we are a early stage startup, I mean, we are like,
Mm.
the markets actually is going through another like, I would, era in terms of changes. So for example, we are so fortunate that when we started our broking platform, we are right now at the cusp of
Mm.
many like long term, like high impact changes, which is like
Mm.
the fund movement. Brokers will not be the at the path. So people investing directly through clearing corporations or passing on the money,
Mm.
so we are not part of the pooled funding. So that's a great place to be from a customer experience, trust, and everything, and we really care about that. So that's a pretty exciting space to be. Similarly, on the securities, we will not be pooling, and directly they will be like, clearing corporation
Mm.
will be crediting in the client's account. So these changes are super exciting and very much focused around consumer. But I think the challenging part actually at times becomes is that when there's such a continuous systematic change across the value chain, right? All the stakeholders, right from exchanges, clearing corporations, depository participants like us, all have to come
Right.
together to make sure that the circular is implemented in the right spirit, so that consumer is not impacted. And I think there still continues to be a lot of to fro between the various
Mm.
stakeholders. I think regulators are doing a great work to actually provide a concerted effort across the ecosystem
Mm.
through forums and all, where we continue to actually ensure that before we go live, everybody is in sync in terms of what, so that the consumer experience is not impacted. So I would call it as a exciting challenging place to be, because the markets are changing so fast, and we are part of that story as an early stage business.
Right.
And the
So I
other
wish
thing,
you all
the other I think there's a lot of this halabaloo on futures and options trading also. One is on the the incentives that the volume based pricing that
True.
exchanges used to pass to brokers. I mean, interestingly for us, we are starting on a very uh, uh, exciting note, in the sense all these changes that regulators are trying to make. I mean, we as
Mm.
an early stage, we actually understand when we were
Mm.
anticipating a lot of these things. So actually exciting place to be instead of challenging place to be, where you are actually have a clarity in terms of how you need to take the business ahead.
Right. Well, before we sort of wrap this up, I have one question coming in from Anika now. So, Anika, wanted to ask you, what is your advice to new investors who are relatively younger and just started out?
I think for young people, I remember when I back in 2009 when I took my first job. Actually, some one smart professor from Bombay, finance professor, told me that while you have joined a hedge fund, which is a very exciting place to understand markets, and but I would tell you the simplest product is to start with an ETF. Like, it is a no-brainer. I think
Right.
it actually gives you exposure to equities in a diversified way with a single instrument. I think that way ETF is a great place for new investors to actually start putting their initial savings to invest. So open a broking account, invest in ETFs. We also have ETF wealth baskets, which is a great place to
Right.
build more asset allocated, smart asset allocation across gold, debt, equity
Mm.
to start with.
Right. Well, I hope, Anika, you got your answer. So there are more Gen Z people, watching the live stream right now. That's a good sign for for us and the community as well. Well, on that note, thank you so much for your time, Ujjwal. And that's all for now. But do say log on to ET Markets or etmarkets.com for more on news, business, and economy. Thank you so much for your time.